Greetings traders, Jason here with SwingHigh.com. It is Friday, October 30th, 2009, and the markets are breaking down right now as we speak. This is your halftime report, and let's take a look at the markets. The SPY is down 1.4%, spiking down right now, as you can see. The NASDAQ also doing the same, down 1.2%. The Dow down 1.3%. I just want to check one thing real quick. Okay, the DJX, which is also the Dow, is down 1.4%. The diamonds is what I was just looking at. There isn't always an exact correlation between the ETFs and the actual indexes. For example, the SPX is down 1.48%, while SPY is down 1.38%. The only difference is that the ETFs have volume, so you can get a little bit better of a sentiment read when you look at the ETFs, which is why I prefer to look at those. Anyway, back to my run around the markets here. IWM, which is the Russell ETF, is down 1.84%, and XLF, which is the financial sector, down 2.92%. That is big. The Russells and financials are obviously leading us lower. Let's take a look at the market internals. The VIX up 6.8% with a big spike recently from 25.75 to 26.46. That corroborates this little spike down, or, well, little in the big scheme of things, spike down we just saw in the past 15 minutes or so. The tick spent the morning around neutral, now is heading towards bearish territory. The Trin, wow, the Trin is spiking up big time at 1.97. That means much more volume is flowing into stocks on the decline than on the rise, which is convincing of a move lower. Let's take a look at the broader time frame of the daily chart. The SPY here, as you can see yesterday, I talked about how we closed right above the lower trend line of the rising wedge. My line might not be drawn perfectly, so we could have either been in that rising wedge or just at it. Either way, it's acting as resistance right now. And what I'm seeing here is, after this down move, a low base forming, especially with today, as of now, although in a few minutes it might not be. So far today is an inside trading day, which is, it's just, this formation right here is screaming low base at me. So I would not be surprised if this breaks down even further to the downside. On a break under Wednesday's low of 104.35, I will enter more shorts. Otherwise, I'm just going to wait for this consolidation to play out and see what happens from there. I also want to take a look at the Russells. Yesterday, the double top that we saw form, or if you remember on Wednesday, the double top here confirmed when we broke this low of 57.53. And yesterday we broke back above that level and closed above 57.53, which kind of took some validity away from the double top. But now we are back below that level big time, down at 56.75. We are still, or back into a confirmed double top formation. And that is very bearish looking on the Russells, and that is usually a leading index. Financials also showing relative weakness, although not quite a double top formation. I'd like to see a break under 1397 on the XLF, and that would be very bearish. In general, on the higher time frame, I'm seeing a low base, so be very careful. I would not go long here, especially with all of this overhead resistance to fight through. There's more money to be made to the downside right now. Thanks for being a part of SwingHigh.com. Check back this weekend and or this evening for more market analysis. Talk to you later.